Hi traders, you're welcome back to the Forex Geek channel. If you've been struggling with noisy price action, false signals, and overwhelming market moves, then this video is exactly what you need. Okay, we're going to be talking about trading daily charts. One of the most effective ways to simplify your Forex trading while improving your accuracy and decision making. Now, daily charts provide a big picture view of the market, helping you focus on high probability setups and reducing unnecessary stress. So stick around as I break down why daily chart trading could be a game changer for you, plus some practical strategies to help you get started. Let's just dive right in. So why should you trade daily charts instead of staring at your screen all day on lower time frames? Here are the key reasons. On the daily chart, there is less market noise. Now, unlike the 5 minute or the 15-minute charts that show constant price fluctuations, you can see unlike the 5 minute charts or the 15-minute chart that show constant price fluctuations, the daily charts gives you a cleaner and more reliable view of price action. No more getting faked out by short-term volatility. All right. Then another importance is stronger trend identification. The daily time frame helps you spot long-term trends with clarity. All right, as you can see happening here, it helps you to spot long-term trends with clarity. With clarity. Now, instead of reacting to short-term market fluctuations, you focus on higher probability setups that align with the bigger picture. Also, with your daily chart, you get fewer false signals. Lower time frames often produce misleading signals due to rapid price movements, but the daily charts filter out weak setups and allows you to trade only the best opportunities. Finally, with your daily charts, you get less screen time and more freedom. Trading daily charts doesn't require you to sit in front of your screen for hours. You analyze the market once per day, set your trade and let it play out. Okay, so it's perfect for those who want to trade without sacrificing their time. All right, now that you know why daily charts are powerful, let's talk about how to trade them effectively. Okay, so the first step is to identify key trends and levels. All right, before placing a trade, mark your key support and resistance levels on your chart. They are very important. Okay, mark your key levels, your key support and resistance levels on your chart. All right, it is very important. Okay, now these areas act as strong zones where price is likely to react. Then the next step is to use price action for your entry signals. Okay, now daily charts are great for price action trading. So you might want to look for candlestick patterns like pin bars, engulfing candles and inside bars near key levels to confirm potential trade setups. For example, we can see what's happened around here, right? You can see that we had a pin bar. So can you see that we had a rejection around this support, and right after that rejection, you can see that we had price climb back up to this resistance. Okay, so it is important to watch out for candlestick patterns around key levels like support and resistance levels in order to confirm potential trade setups. Okay, when you find a bullish candlestick pattern around a support, there is a higher chance of the analysis playing out, all right? And when you find a bearish candlestick pattern around the resistance, there's a higher chance of the analysis playing out. Now, the next thing for you to do is to be patient with your entries and exit, all right? Now, unlike lower time frames, daily chart trades can take several days to play out, okay? So set your stop loss and take profit levels based on major market structure, and let the trade develop without over managing it. All right. And finally, risk management is key. Okay. Risk management is key. For example, if we had entered a buy trade around here after we got this bullish setup, we have considered setting stop loss below that key level. All right. Then take profit can be around the next key resistance. Always risk a small percentage of your capital per trade, even on a high time frame. Okay, it is necessary. It is very important. Capital preservation is as important as profit generation. All right. It does not. It does not. It does not mean anything good if, in the bid of trying to make profit, you end up losing your capital. All right. That's not a good decision at all. So it is important that you always risk small percentage of your account balance per trade, ideally between 1 to 2% maximum. All right. So position sizing is actually crucial, to staying in the game long term. All right. It is necessary. Okay, if you want to be a successful trader, you have to employ proper risk management. And even when you are executing your trades, it is ideal to employ a good risk to reward ratio. For example, if we enter a buy trade around here, we're going to be risking somewhere around perhaps 650 pips. Then our potential profit target is going to be around somewhere around 1,200, about somewhere around 1,200 pips, right? So that's actually close to risk to reward 1 to 2. That's actually close to that. Okay, so it's important to have good risk to reward ratio. So there you have it. Trading daily charts is a powerful way to approach the forex market with clarity, patience, and confidence. All right. Whether you are a beginner or an experienced trader, focusing on the daily time frame can help you make smarter, more strategic trades while avoiding the stress of lower time frames. Now, if you enjoyed this video, make sure to hit that like button and subscribe for more expert trading tips. Turn on notifications so you never miss an update. Drop a comment below. Do you trade daily charts? What's your experience been like? Let us get a discussion going in the comments section. In the meantime, thank you for watching, and I will see you in the next one.